Trading around 728, 729 this morning, so coming back quite strongly from yesterday. It looks like risk is back on the table at this stage.
Certainly does, Stephen, and I think it's all in the wake of yesterday's manufacturing data internationally. That is, we had a slight improvement in the Chinese PMI reading, and then later in the afternoon we had some encouraging ISM figures out of the States, and I think that's really what's spurred this risk appetite, and the Rand's benefited from it. But you know, by and large, this Rand is still stuck in this 720 to 740 range. We've tried to reach to the downside, that hasn't been sustained, and equally above 740 also hasn't been sustained. So we're really stuck in a range and really just mirroring this global risk appetite.
You mentioned a slight improvement in those Chinese PMI numbers, and it was quite slight in the official number. And US ISM was positive, but across Europe the PMI numbers actually pulled back slightly. Our own PMI ticking up a little bit.
Yeah, our own PMI picked up a little bit, but also still fragile. Like you're saying, a lot of these manufacturers are still struggling with weak global demand, and I think South Africa is no exception in that regard. And I think, given that we're still in a very strong Rand environment, I think these manufacturers are going to struggle to sustain a strong recovery. I think it's going to be quite tough. We've got strike activity as well, and demand domestically and abroad is pretty soft. So I think the improvements are welcomed, but we're definitely not shooting the lights out at this stage domestically either.
And of course, the market really just focusing what it wants to focus on. So we had the market focusing on those ISM numbers out to the United States yesterday, but really disregarding the ADP private sector job numbers, which showed 10,000 jobs were lost. And of course, that comes ahead of those non-farm payroll numbers tomorrow, and they're going to be closely watched, aren't they?
Correct, Stephen. Those are always the big numbers to watch. But having said that, we know that employment data is it's a lagging indicator. We would like to see pickup in the manufacturing, the retail sector, and then hopefully the jobs will follow. So the numbers probably don't bode well for the payrolls figure tomorrow. But I think the market is probably discounting another pretty dismal employment reading, because we're still not seeing signs of the recovery in the leading indicators, like I say, the retail sales or the manufacturing data. The recovery there is still pretty pedestrian. So it's going to take some time before we start seeing some encouraging payrolls figures.
Of course, we're getting car sales figures out here for August. World Cup is well past now. What do you think we're going to see on that side? Because we had seen quite a nice pickup in car sales through the first half of the year.
Yeah, absolutely. And I think we're also starting to wear off in terms of base effects. So I think the risk is for vehicle sales to come under pressure going forward. Of course, again, we've got a bit of strike activity in that industry. The Rand is quite strong. There's a lot of factors that are making it difficult for manufacturers, producers, and the vehicle sector is no different. So I think that the risk is that the numbers disappoint, and it once again reinforces our view that GDP is going to struggle in the latter half of this year. And that's why we think that the Reserve Bank is probably going to need to cut interest rates by another 50 basis points next week.